Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mish Schneider, Director of Trading Education over at MarketGauge.com. Mish, it's great to see you. Welcome back to Trade Talks.
Thank you, Jill. Great to be back.
All right, let's kick it off with everyone's favorite topic, Bitcoin. We're looking at some imminent approval of Bitcoin futures ETF. There was a number of announcements that we can expect to come out this week.
Yes, and on Tuesday, BITO starts trading. I think in anticipation of that and the fact that the SEC basically said they weren't going to stand in the way, along with Jerome Powell, that got Bitcoin to go up from 57 up to where it's trading right now at over 62, with the all-time highs a couple of $1,000s higher. So I think this is a really good indication of the legitimacy of it all and should bring in a lot more retail interest, as a lot of folks were hesitant to trade the over-the-counter, the grayscales that were on delay, and of course the currency itself.
All right, let's talk about Ethereum as well, because that appears to be benefiting from Bitcoin's success, as it only has to beat one more crucial resistance level, as you pointed out in your charts here, before it battles all-time highs. Although, the use case for Ethereum is a little bit different than Bitcoin, but they do kind of have this, relationship where they do correlate to each other.
Absolutely, because Bitcoin has over $1 trillion market cap and Ethereum is number 2 in terms of weight in the space. And of course, it relates to blockchain technology, which is also in its infancy. So whereas Bitcoin is the more store of value in terms of currency, with the technology that Ethereum brings to the table, gets through 4,000, we'll see where it goes. But it's been exciting for a lot of different of the currencies as well. Dogecoin all of a sudden making a big move up. Solana, Polkadot, they're sort of taking turns. And we're still looking at Ripple, XRP, because at some point we do believe that the lawsuit with the SEC is going to be resolved.
All right, now we're in earnings season. Finally, something else to talk about besides what's happening in the macro space. It's here, and the banks started off showing huge profits, pointing to a recovering economy, and deal activity certainly helped the bottom line as well.
Well, yes, and of course, what's interesting about the financials and the banks is that if we are truly heading into a more hyperinflationary environment, which certainly it looks like we are, then the yields, which interestingly have dropped, but up until today were actually going higher, that will benefit the banks even more, because if there's higher interest rates, there's a lot of cash around. People did not spend money and hoarded a lot of cash over the course of the pandemic. They could actually put that in the bank. And so that's why you're seeing a lot of follow through here after the bank earnings. In terms of some of the other earnings, I think it's really going to be the bottom line of the supply chain problems, the rises that we've seen in prices, particularly in a lot of the commodity prices, and how they are going to be able to pass or not pass that cost on to consumer and how that affects the bottom line. But what's happening here is we've had $800 billion worth of corporate buybacks in their own stocks, which is basically surpassing the 2018 level, which means that a lot of these stocks now are not only getting retail investment interest, but they're also getting their corporate buybacks, which at a time when production is less is interesting.
Yeah, I would agree with you there. And really that I think is the variable, and not only what we see in the numbers for Q3, but of course for going forward and what their forward guidance looks like. I think holiday 2021 is going to be a huge tell there. But moving to macro, let's talk more about that. The PPI went to a new record high. It's keeping inflation, especially the Fed, on its toes. That's really going to be a consideration when they think about tapering and rate strategy. What are you watching there? And you also have to include labor market and how it's impacting the Fed's next move.
Well, really what's so amazing about the Fed right now is that they have so much of their own issues going on with, of course, what we saw, that they have stock portfolios. And now we have Powell coming up for re-election, or renomination, I should say, next year, early next year. And they're in really a hard place right now, which is something I know you and I have talked about in the past. Because if they put the kibosh and they start raising rates too soon or too fast, or do anything other than what's already priced into the market, of course, they have a real chance of crushing the economy, given everything you just said, the labor market, the higher prices, et cetera. On the other hand, it's already inflation running hotter than what they said their target was, but they keep sticking to the transitory conversation. So it's really a situation where in 2022, we could just see things get out of control, way beyond monetary policy being able to rein it in, considering how easy monetary policy has been up until this date and how fragile we still are economically.
Right. So Mitch, to wrap up here, what's most at risk now when you look at how the market is poised to hit all-time highs, right? You have the inflationary backdrop and of course, supply constraints threatening to hinder holiday performance and so forth. So what's, where's the risk?
Well, right now, if you look at the risk indicators, risk is on. I mean, it's bullish out there. So it's really hard to pick one thing and say this is going to be the straw that breaks the camel back. And that brings us back to the Fed. If they decide to do anything extraordinary other than what's priced in, I think that would probably be the biggest risk to the market, which would be the taper tantrum that we saw at the end of 2018.
Yep. All right, Mish. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.